Hi everybody, my name is Adam Meyer. I'm back with another video. Today we're going to talk about levels where I expect the stock market to go, specifically the NASDAQ, which basically drives the entire stock market. The NASDAQ, the S&P, and also the Dow Jones. They're the big movers for the overall market. We're also going to go over Bitcoin. As you can see here, always go over Bitcoin. And you can also see with the Tesla shirt, we're going to go over Tesla and also inflation matters of how these affect prices of Tesla and what this can mean for you and also other companies that are involved with this whole space. So let's get into this here. All right, everybody, let's get into this here. Here's the NASDAQ. We've came down about 22% since the beginning of the year. And we're starting to finally retrace. If you can recall from the last video, I was talking about possibly buying based on the Fed news of their interest rate hikes. They've actually said some good things, but they've been raising them. They raised it last week 0.25%, and we're looking for future rate hikes to come in the future. But there can be an issue with this. If they raise too fast, they can completely drop this market into a recession. They might not do that yet, but it could be possible, so we always got to keep our minds on that. So we got to invest money that we are willing to lose, but we're always in here for the long term, because if they do drop the markets at some point, they're going to recover them. Their big bank buddies are going to call them up and be like, yo, can you bring up my stock price again? It's coming down. We've lost too much money. Let's bring it back up. And then they're going to start spitting money out again, as in like what happened down here. Because this is where they started loading up the system with money, and they started buying assets, which was driving price higher and higher and higher. And that's why we've seen this bull market like continue for the past year and a half, 2 years since COVID started. So we've seen this come down basically for the fear of the war, fear of interest rates, and now the interest rates are here, and it's finally starting to move higher. So go check the last video if you haven't seen it, but it's very important about what I discussed there. But for seeing price, what does this mean for you? I think we could see some type of movement up within this range. So I am personally bullish up into this range, and I was buying some stocks. I actually bought some Google. I did buy some more Tesla in one of my accounts, but we are looking for price to come up within this range on the Fibonacci. And if you don't know what the Fibonacci is, message me and we can go over this quite a bit. But basically, we're just measuring this range from the high to the low, and we're looking for a retracement into a zone, and that's where price tends to have some type of reaction to go the other way. So if we're going to measure this range, we're measuring from the high to the low. We're looking at the 62 to the 79%, and that's where I'm looking for price to possibly come into before seeing some type of reversal either down into here or down lower down into there. I tweeted this yesterday. I also went over it in the last video, but this is what happened in 2008. It doesn't need to be exactly what happened here, because the economy is a lot stronger now, and we have a lot more innovation. Like the U.S. overall, a lot better than it was back in 2008. But we're seeing a very similar pattern that we saw then. We saw this sell-off, and we saw the buy up, and could be what we're seeing now. And then we came up into the 62% that I just mentioned, and then this could just fall and completely die off. If we go back over to what we're seeing now, here it is. If we could reach up into here, we could see some type of reaction. So this is what we have to keep our eye on when price does come to that level. But for now, I'm anticipating price to move higher so I can capitalize on that move. Also, for long-term investing, it's always good to just load up, and that's what I like to teach here. That's what I typically do. I do more of long-term investing versus the full-on day trading, because that can be you can get mixed up with like a lot of wins and losses in there if you're not careful. So that takes a lot of experience to be very profitable with that. But long term, buying and holding in good prices and having price targets to possibly get in or out or add more to your position. But this is what we're looking for up within there. Either move higher, come down, buy back up, or a complete sell-off down here and then a buy back up later. But overall, long term, I'm bullish. I expect price to keep moving higher and higher and higher. So as we saw price move up higher here, we're actually starting to see it settle down a little bit now. So we're seeing the 1, 2, 3 move. We could look for some type of retracement down within this range to then keep moving higher. So that's actually what I'm keeping an eye on now. So this isn't financial advice, but for educational purposes, that's the area that we could be looking for something. So if you want to go look at that when price comes to that area, maybe set some alerts and then possibly anticipate higher pricing up within here. There are a bunch of factors, so you got to be very up to date and very knowledgeable about this space, like who you listen to and what you can expect to happen. But as this moved higher, Tesla itself started to move pretty fat. I'll say that, fat with a capital PH. Oh my God, I gotta cut that shit out. So as we watched the NASDAQ move higher, we actually saw Tesla move a good movement up about 36, 37%. That's a pretty fat move in my opinion. Tesla had some great news with the Berlin factory and also just the overall market. Banks are loading up. That's the bottom line. The banks drive the market. They do what they want to do with price. People were anticipating prices to move lower, but the banks wanted to move it higher. So that's what they're going to do. And if you saw this coming based on experience or whatever, or investing, if you're buying the dips, you're up that amount of percentage, about 37% from this low here. Technical analysis wise, if you measure this range from the low to the high, you fell in between the 62.79 and then you're moving up higher into here. Same with Google. Google did something very similar. I did actually buy one share of Google within one of my other accounts. I'm not that diversified in this one account, but I do have a few big name tech stocks in there. But I did buy a share of Google. My average buy-in price was $2,665, and we could be looking for a range up within here, even up into there. But I do like that they're having a stock split. So overall, I'm going to be watching Google as the NASDAQ moves up into this range to debate if I want to sell this or not, or if I actually want to wait for the stock split, or if I just want to let this stay in this portfolio. Because if you do have another portfolio that you want to do more like long-term investing in, you could wait for the stock splits to actually happen, because this is happening in the summer of this year, where if you own one share of Google, you're going to be getting 20 shares evened out. So if Google's at $3,000, let's actually pull up a calculator here. So if Google's at $3,000 and you own one share, and they do a 20-to-1 split, so you'd be getting 20 shares for $150. So you're not going to gain any money or lose any money, but you'll have 20 shares versus one share. But instead of $3,000, you'll have it at $150. So if you just do the quick math there, but that's what you're going to see with Google. Let's get over here into Bitcoin and what we can see with that as well. Nothing's really changed since last time I went over this. I still got my levels down here at 20K. I'd be liking to buy a full Bitcoin if it does come down to there. But we are just consolidating in this range. We're not really seeing much. We're not really seeing a breakout of this range here in like really bullish momentum. And we're also not seeing a break lower. What I really want to see is one more bounce up into here, create somewhat equal highs, fall down within this range, possibly even 30K, and then actually start to see those moves higher. Or if we do come lower, down into here. But that's the thing with long-term investing. All you can do is buy the dips and hold. If you're going to buy at the highs, you're going to buy up here, you're going to buy up here, but then you get scared when it comes down, then it's going to go down. Then it is what it is. But if you're just dollar cost averaging buy, but like don't sell. Like, this isn't financial advice, but don't sell, because you're going to lose your money if you're buying on the dips and you're negative. So you really want to wait for those higher movements to, if you do want to sell here, take some profit off the table to buy back lower. For those of you that know me pretty well, I was buying up within here, but I was closed out as we started breaking these areas and these strong areas up in here, because I was anticipating lower pricing. So now these are just areas to wait for what the Fed is going to do, and like if we can get another buying opportunity, or if we just wait out and hold what we have. The last thing I wanted to get into here was the Tesla Model 3 and the price difference that's happened over the past year. Because I remember I was looking into possibly wanting to buy one of these about a year ago, and we were sitting about like 40K, like high 30K, 40K, 45K or so. And that was like without the self-driving. Some were priced in with the self-driving and some were not with the self-driving. So within that price range, but now with the self-driving capability, everything's going up. So this Model 3, like the base, it's not necessarily a base model, but like one of the lower end models of the Teslas, this is going for about $58,000, but after potential savings, about $53,770, which is crazy. So that is inflation. I'm going to actually bring over what this can mean. So inflation can equal a higher cost, as you see with the Tesla, but that also means higher profits. So that could be good for Tesla, as we just mentioned the Tesla stock. So over time, after the overall market like settles, whatever the market wants to do, but over time, Tesla's going to be bringing in more money, because inflation is actually good for their company, because their demand is so damn high. So the demand is high for the supply that they have, so they can charge more. And that is good for the company, but for the regular person, it actually hurts people, because it costs more for food and all the regular living expenses. As technology does begin to improve, it can be a solution to inflation because there's going to be like more automation within things, and like more advanced jobs are going to be out. So that can reduce inflation somewhat. So technology over time will reduce it, but that's more of like a long-term aspect kind of thing. All right, everybody, this is going to wrap it up, but the key takeaways are inflation could mean higher profits for a lot of these companies, such as Tesla, Apple, can be possibly Facebook and Google, but overall, the bigger companies can profit more. But you also got to keep in mind what the Fed can do. The Fed can raise these rates so fast they can throw us into recession. But if we have our mind in like possibilities like set lower, we can buy these dips to hold for the long term, because that's what I do. I don't like to swing trade these as much, getting in and out. I like to buy and just hold for the long term. I'm only 22 years old. I'm almost 23, and I'll be looking just to hold everything. I hold the Bitcoin, hold the Solana, hold the Ethereum, hold the Tesla, hold the Google. Like right now, I don't have too much in Tesla, to be honest. I have 5 shares, and they're sitting about 1,000 a piece. I bought those on an average cost of like 120, 130 around there, way back when I was in high school. And it's just crazy to see like what price can do. But overall, long term, that's the way to go, and that's how I like to look at it. So if you have any questions, let me know. Send me a message if you want to join the Discord, because we do Zooms a few times a week. We educate our people within our chats, and that's just what we love to do. So let me know. Take care, everybody. Love y'all.